Today in Washington, President Biden announcing new measures to fight the Omicron variant. What's in his plan? Electric truck company Nikola slapped with a big fine by the Security Exchange Commission for cheating investors. What did the SEC say? That and much more coming up on NTD Business. Good evening. Great to have you with us. I'm Paul Graney. President Biden today announcing a new plan to fight the virus as Omicron quickly spreads and becomes the dominant CCP virus variant. The president says 500 million home test kits will be made available to Americans for free from next month.
The federal government will purchase 1/2 billion, that's not million, billion with a B, additional at-home rapid tests with delivery starting in January.
More federal vaccination and testing sites will also be set up. The president's also sending some 1,000 military personnel to support local hospitals overwhelmed in some areas. The president reassured vaccinated Americans they could proceed with their holiday plans, but offered a warning to the unvaccinated, saying they have significantly higher risk of ending up in hospital or even dying. He urged them to get the shot.
All these people who have not been vaccinated, you have an obligation to yourselves, to your families, and quite frankly, I know I'll get criticized for this, to your country. Get vaccinated now. It's free. It's convenient. I promise you, it saves lives.
About 1 in 4 American adults are not fully vaccinated. CDC estimating Omicron now accounts for 73% of all new U.S. cases, up from less than 1% at the beginning of the month. But it's not yet clear whether the variant causes more severe disease than previous variants, although fewer than a dozen deaths have been reported worldwide. And the Kellogg strike is ending. The company said today workers voted in favor of a new contract. It offers better terms for transitional employees and across-the-board wage increases. It ends an 11-week stalemate between Kellogg's and workers at 4 cereal plants. The plants have been running with salaried staff, temporary workers, and some strike breakers. But now the 1,400 workers who were on strike will return to work next week. And the Biden administration has increased fuel efficiency standards for passenger vehicles, bringing back tougher rules from the Obama era. NTD's Colin Fredrickson has more.
These standards will be the most ambitious standards in United States history.
The EPA has released new greenhouse gas standards for passenger vehicles. Administrator Michael Regan finalized the rule Monday.
We follow the science and we follow the law. And the science is calling for urgent action to reduce pollution, fueling climate change, and making people sick.
Automakers must now meet a fleet-wide fuel efficiency average of 55 miles per gallon by model year 2026. The Trump administration had set the standard at 43 miles per gallon.
There is a direct correlation between the amount of fuel you burn and how much carbon dioxide you put up into the atmosphere. President Trump was somewhat of a disbeliever in global warming and climate change and was overall very anti-regulatory. We are back on the path that environmentalists have been pressing for.
Paul Eisenstein is the editor-in-chief of the Detroit Bureau. Eisenstein says automakers will have to spend more money to hit the higher standards, and vehicles may cost more. But it'll be good for electrification.
Most of the manufacturers are pushing to go electric. And this actually encourages consumers to go electric as well. This is actually going to help move the market in the direction that the industry wants now.
Also, the EPA predicts the rules will save drivers between $210 billion and $420 billion in fuel costs through 2050. Meanwhile, the Alliance for Automotive Innovation says the standards would be hard to achieve without federal support. Colin Fredrickson, NTD News.
And would-be truck maker Nikola will pay $125 million to the SEC. This to settle charges that it defrauded investors about its electric trucks, with the SEC accusing the company of lying about its production capabilities, reservations, and financial outlook. The SEC says Nikola's founder, Trevor Milton, inflated Nikola's share price even before the company had produced a single commercial product or had any revenues from truck or hydrogen fuel sales. Milton is still battling these allegations in court and has not admitted wrongdoing. And Nike's latest earnings are out. Sales were better than expected, despite supply chain pressure. The company says strong demand in North America fueled the sales, with revenue up 12% year over year. That helped offset a collapse in China, where sales were down 20%. But China is key to the company's future growth. Now investors focusing on Nike's recovery there. The company saying production shutdowns in Vietnam hurt results across Asian markets. But it seems China's economy continues to slow, rattled by real estate and energy, and could be affecting the steel industry next. NTD's Olin Richards reports.
China's economy is on shaky ground. It's still reeling from a real estate collapse, an issue now spreading into other sectors. The steel industry may be next in line and is seeing massive drops in demand. That's a far cry from earlier this year when steel saw record highs. It was one of the country's best performers in the first 3 quarters of the year. China's 28 major listed steel mills garnered over $16 billion. That's up over 150% year on year. But a sharp demand drop has followed since then. 2 factors are causing it: easing demand and lower costs for raw materials. The steel industry is tied closely to China's economic success. That's because construction is a key indicator of health for its economy. And ever since a slew of real estate companies started floundering, the steel industry has felt the effects. The most well-known case is Evergrande, a property development giant that recently defaulted. But it's not just steel. Other areas of construction are also seeing demand drops, from cement to excavators, even refrigerators. The dwindling property market is driving those trends too. The final quarter of 2021 saw a 5-year high in unsold housing stock. That's in China's 100 biggest cities in the month of November, and with no reversal in sight. That property market is expected to keep the decline going in the coming year. Arlene Richards, NTD News.
And China has reportedly told Amazon to censor comments on Xi Jinping's book, according to sources from Reuters. Beijing reportedly pushed the bookseller to delete all comments and reviews related to Xi's book, The Governance of China. 2 sources said it was to prevent any negative reviews appearing on the website. We looked up his book on Amazon's Chinese website and found it doesn't have any customer reviews or ratings, and the comments section is disabled. Amazon told us it complies with all applicable laws and regulations wherever it operates, and China is no exception. And Wall Street's main indexes ended sharply higher today. The Dow rose 561 points by 1.6%. S&P 500 gained 81 points, 1.8%. The Nasdaq today gaining 360 points, almost 2.5% today. And meanwhile, crypto is picking up steam in Turkey again, surpassing 1 million crypto trades per day. That's as the country's currency, the Lira, struggles with volatility. Turks are apparently looking for safe havens to park their money, crypto being one of them. The last time crypto was this hot in Turkey was back in March, when the country's central bank chief was suddenly replaced, causing panic and a crypto frenzy. Turkey's deputy finance minister recently said regulations on crypto are coming soon. The country's central bank has already banned using crypto for purchases because of transaction risks. And the Turkish lira has made a remarkable bounce versus the dollar over the past day or so. The turnaround started after the country's president seemed to say he would guarantee any lira deposits against volatility. So, for example, if the lira were to fall 10% against the dollar over the next 12 months, the government would pay you the difference in lira. We don't have the specifics on the plan yet, but the lira is up about 45% in the past 24 hours. While that may sound good, remember the currency was down almost 55% for the year before that rally, still down 40%. Economists blame Turkey's low interest rates, money printing, and loose monetary policy for the rapid devaluation. So joining us is Mohammed Demir, Turkish national, now working in London's financial district as the head of capital markets with Swiss Finance Corporation. Mohammed, great to see you. Thanks so much for coming on.
Hi, Paul. Thank you.
Mohammed, we have a Lira down 40% in the dollar for the year. We have a Turkish stock market in free fall. How are your friends and family in Turkey feeling?
Well, everyone is frustrated, obviously, with the huge volatility, especially in the currency. The companies cannot foresee the exchange rate to be able to import and export, and especially daily life has had a huge impact. Like if you want to buy anything, any staple food or goods, it's literally changing day by day. As you know, the exchange rate is changing almost 5 to 10% every day for the last couple of weeks.
Why is it? Because we see ultra loose monetary policy all around the world. Why do you think Turkey has felt such a bad effect so fast?
Well, ultra loose monetary policy is viable whenever you have low inflation rates. If you look at Europe, UK, or US, or Japan, for that example, they all have very low inflation rates. So when you have low inflation rates, that's totally fine, because then the liquidity in the market is not having any impact on the general daily life. But when the inflation starts going up and starts getting out of hand, just like it happened in US recently, we've seen inflation levels close to 7%. Then what did we do? We just suddenly said, okay, we are stopping loose monetary policy now. We're going to start tapering. Oh, okay, we're going to taper quicker, and we are going to increase interest rates in the coming years just to tackle this problem. But Turkey already had a problem with inflation. If you go and decrease the rates below the inflation rate in a way that the real return is too negative, it's basic mathematics. What would happen is, let's say you have 14% interest rates, right? Central bank interest rates. But if you go to the bond market, the government treasuries, it is trading at 22%. So there's a kind of arbitrage over there, okay? People would use this, banks will use this. Secondly, if I know that the inflation rate will be 50% and the cost of borrowing a loan from the bank is 14%, I would only do this. I would just go borrow 1 million Turkish liras from the bank. I would just go and buy whatever I can buy. Say it, sugar, say it coffee, whatever you can buy. And I know that in a year's time, I will pay back 1,140,000 Turkish liras, whereas I know that the goods that I bought would be worth 1.5 million. So it will push people to stock goods that are necessary for, daily regular life.
Are we seeing this in Turkey?
Yes, it's happening in Turkey already. The car dealers are not putting all their cars out there because they know that it's going to be more expensive next month and the next month. And all the basic goods, it could be anything, like from sugar to gasoline to whatever you can think of. If I wait a little bit further, I will sell it for higher. Why would I sell it now? That is the problem with the high inflation. Turkey was used to be in this situation, but in the previous decade, they were doing great. They just took the inflation almost to single digits, and the interest rates were going well. The GDP per capita was increasing, but everything went down south after around 2013.
A warning, I think, for the rest of the world. Mohammed Demir, Swiss Finance Corporation. Appreciate it. Thank you. Merry Christmas.
Thanks a lot. Merry Christmas and Happy New Year. Bye-bye.
Well, that will take a quick break, but still to come this evening. With the holidays quickly coming, we talked to one top chocolate maker about what's trending this year. And champagne sellers in France are toasting record sales. We hear from a store owner in Paris. That and more coming up on NTD Business.
Hello, I'm Mike Lindell. Cancel culture has not only affected myself and MyPillow, but millions of you out there. Before all this started, I had already written in my memoir, I dedicate this book to anyone that's looking for hope. Well, right now, we're all looking for hope. I believe that my story is going to bring inspiration and hope to everyone. By the time you're done reading my book, you will believe that with God, all things are possible. To thank you all for your support, I'm offering some of my best prices ever on MyPillow products, including this exclusive bundle. You get my book and these 5 MyPillows. They all have beautiful scenes and verses from the Bible, such as Isaiah 41:10. Do not fear, for I am with you. This 6-pack bundle is regularly $219. Now it's just $99.98 and free shipping with your promo code. Go to mypillow.com and use the promo code on your screen or call the 1-800 number below. Thank you and God bless.
You are not just watching a performance. You are witnessing a culture reborn. Now, you'll see what the modern world has never seen. China, before communism. Shenyun 2021, live on stage. Get tickets now at shenyun.com.
There are 16 million children struggling with hunger in America. That's 1 in 5 daughters, sons, neighbors, and classmates who don't know where their next meal is coming from. Yet billions of pounds of good food go to waste every year. It's time we do something about it. Feeding America is a nationwide network of food banks that helps provide meals to millions of kids and families in need. Visit feedingamerica.org to help them feed even more. Together, we can solve hunger. Together, we're feeding America.
Welcome back. So with Christmas and the New Year fast approaching, we're joined by Charlotte Green of Barry Callebaut, one of the world's top makers of high-quality chocolate. Charlotte, great to see you. Thanks so much for coming on.
Thank you. Great to be here.
Charlotte, for anybody looking for that uber trendy Christmas gift, what kind of trends are you seeing in the chocolate space?
So the holidays are the prime time for chocolate confectionery, where we're seeing great innovation in the market. If you asked me last year, it would have been the hot chocolate bombs, and this summer it was more about the kind of 4th of July s'mores boards, but we're seeing that trend really continue now into this holiday season with dessert charcuterie boards, so where you've got all sorts of different chocolates laid out for your guests. So really uber indulgent. And another trend that we've seen on TikTok is Christmas bark, where you scatter lots of different things, whether it's pretzels, candies, nuts, that kind of thing, and then pour melted chocolate over the top of it and tear that apart with your friends and family. So lots of fun trends definitely this season.
Wow, sounds like fun. What about flavors and anything new as we kind of come through the pandemic? Are people looking for anything new?
Well, actually, what we're seeing is a reversion back to those comforting, nostalgic flavors. So things like peanut butter, marshmallow. But actually, we saw from the National Confectionery Association, they recently did a consumer survey, and almonds actually just edged out peanut butter as the top ingredient that consumers like to combine with chocolate. So there's always, nuts is always like top of the game there, as well as caramel. But yeah, we're definitely seeing what's new, I think, is where we're seeing chocolate makers really taking these ingredients into new formats. So whether you've got ice cream flavored candy or you've got dessert inspired chocolates, we're seeing the categories blur, if you like.
We had a toy store on the show, I believe, just at the end of last week. They said nostalgic toys are actually making a comeback as well. They felt it was something related to the pandemic too. And how about for you guys? Where have the sales been? Did you see a shift in sales, maybe away from traditional channels onto more online over the pandemic, or where are you seeing the success?
Oh, absolutely. Like we've seen a big boom in e-commerce for sure. But I think what we've seen more recently is that, and it's partly driven by that shift to online, is that seasonal sales are getting later and later. So people are leaving it later to purchase their chocolates. So we saw that in Halloween. So it was up 10% in dollar sales just in the last season. So it was a real boom year. So much higher than even pre-COVID levels, which is exciting. And so we're expecting that with the winter holidays as well. So we know that, consumers are expecting celebrations to be normal, and the number of consumers saying that is up from last year. So we expect this year to be a big year as well.
And I think like all of us, we're starting our preparations for next year. What are you guys planning?
So we're always looking ahead. One of the things that we do at Barry Callebaut is support some of the biggest brands with their recipes and their innovations. So already businesses will be looking at least 12 months in advance. So they're already planning what they'll be launching for next Christmas. So that's exciting. But we're also looking at the other trends, of course. Good for me, things that chocolates that are healthier options will become really big in the new year. And another sort of bigger trend that we've seen over the last couple of years is really picking up is also seeking out sustainably sourced chocolate as well. So getting bigger every year.
Interesting. Charlotte Green, Barry Callebaut, appreciate it. Thank you so much.
Thank you.
And French champagne houses expect record sales in 2021, sharp turnaround from last year. Customers apparently haven't lost their taste for bubbles, whether dining out or at home. Lucy Fielder has more.
France's champagne producers are toasting record sales, an unexpected turnaround from last year's doldrums. The industry is expecting a turnover of 5.5 billion euros, or $6.2 billion in a year, 10% more than the previous record. The rush to raise a glass after restrictions eased this year could even leave some champagne lovers empty-handed over Christmas and New Year. Benoit Melendez owns a champagne store in Paris.
Since September, it's been crazy. We're having trouble meeting the demand. Many champagne makers are not able to supply us.
Some economists and investors fear any new round of restrictions could stall sales again. But sellers like Melendez say people have got more used to celebrating at home, which should keep demand high. Customer Evelyn de Gorianoff likes to crack open the bubbles for dinner.
No need for an occasion necessarily. I think a few bubbles can bring on a good mood, and we like it, mostly as an aperitif, very often as an aperitif. Occasionally with dessert, and yes, every occasion is good.
Despite fears of supply hitches, there's no underlying shortage, because champagne producers hold large reserves that can be tapped to blend gradually for new bottles. Pressure on availability has contributed to the spectacular 2021 sales, which Melendez says means prices of the luxury sparkling wine could go up.
And in Beverly Hills, California, holiday decoration trends are all over the place. From glam to ultra luxury to 80s disco. NTD's Andrew Thomas has the details.
This year, black trees, wreaths, ornaments, and black feathers are in. There are even stockings for the fireplace with black velvet and sequins. This year, it's all about luxe and sheen, with glittering metallic silver and gold to create accents against the black, for a glam retro 80s look.
The big trends for 2021 are black, metallics. We've moved away from the green and red, and we're going full on silver, sparkles, glam, glitz. We have disco, we have old Hollywood iconic ornaments, and it's all very fun and festive.
Silver metallic animal ornaments such as rabbits and penguins are also in this year. From indoor decor trends to outdoors, the big trend for outdoor lighting this year is LEDs. But even more than past years, everything is getting lit up, and the festive scene should be good for business.
Our researchers are projecting an 8.4% increase in retail sales this holiday season, and we're really excited about that. And it's across the board. We're looking at 10 to 15% increase in sales in brick and mortar stores, and e-commerce is expected to be up about 20% this year.
On the streets throughout Beverly Hills, immersive large-scale holiday decor means about 1 million lights this year. It's a winter wonderland with towering palms wrapped in glowing lights. As Christmas music plays on the streets along tree-lined Rodeo Drive, teardrop lights drip from the palm leaves. Kathy Gahari, president of Rodeo Drive Committee, says the street has never looked better.
I believe each tree has over 30 teardrops that are dangling down the leaves. We have gorgeous statues up and down, 11 statues that are our holiday helpers. They're here to help shoppers shop for their friends and family. We have, in the center median, we have 2 vintage cars as part of those vignettes. So the street is very festive.
As the lights twinkle, shoppers enjoy the outdoors in one of the luxury capitals of the world. Beverly Hills promoted the outdoors during the pandemic, and businesses are seeing positive results. Andrew Thomas, NTD News.
That's the latest business updates for today. Thank you for watching. We'll see you soon.
Thanks for watching us on YouTube. Did you know YouTube only keeps selective videos on its platform? So if you want to make sure you get the full picture, just subscribe to our newsletter. Go to newsletter.ntd.com and sign up. It's free.